Good morning all and welcome to today's video. So today I have two pairs on watch. Those are dollar Swiss and Kiwi dollar. Just to say, I placed a trade yesterday on pound dollar and I was tagged out of that for technically what was a profit. I made 0.2% profit on that, but technically, well, it goes down as a break even in my documentation according to my Notion documentation and the spreadsheet which I use to document my trades. It technically, well, it goes down as a break even, but technically I made 0.2% profit. So I'm going to break that down for you now before I talk about the two pairs which I have on watch, and I'm going to talk about how I managed my pound dollar trade, because there's a few little intricacies in there related to the economic data which we had coming out of the United States yesterday, which may be of interest and of value to one or two of you. So pound dollar, why was I looking at this trade? I was looking at this trade because on the higher time frames, we had this kind of three-touch structure there. I'm just drawing it loosely to just show you what the bigger picture was. So we had this 1, 2, 3. We know that on the higher time frames, typically price breaks below an area of value when people believe what was previously support becomes resistance once price breaks below. They listen to news narratives which would have said things like pound dollar at 3-year low. I remember the news at the time. I remember these so-called trading experts in inverted commas saying that they thought the price was just going to keep going. And then I was thinking to myself, well, that's not what I'm seeing. I'm seeing a three-touch structure, which will likely break below and then break back in. And then, of course, when that happened, these trading experts on mainstream media stopped talking about pound dollar going to the downside, as if they'd made no forecast at all. But that's a story for another day. And one of the reasons I was looking at this 1, 2, 3, and I thought it would break below and come back in, is because we had a near miss up here to here. I've talked about previously how when we have a near miss which fails to tap into a very high area of liquidity, it's often the case that we'll find our way back up there. In this instance, most likely by way of an impulse correction continuation to the upside. So that is the bigger, which would take us, if we just measure it and assume that they're of a similar length, that would take us up to this area, okay, to complete that move. Okay, but in the meantime, we could be looking for shorts to the downside, and I shall explain why I was looking for shorts to the downside if I just drill down. So there's no reason necessarily for price to come all the way back down to here, because this is a completed piece of structure. We have a 1, 2, 3, and within that we have this kind of 1, 2, 3 completed middle section. Okay, so that is the higher time frame picture. As I drill down, we also have this 1, 2, 3 touch structure there, which has a 1, 2, 3 middle section. Okay, so that is a completed piece of structure, but this is where the intricacies come into play. We also have this sharp hook point here. We have this sharp move down followed by a sharp move up, giving me a clue. We often see that sometimes within a piece of structure such as this. We often see that about halfway in. This is slightly over that, but we see these sharp moves down, followed by a sharp move up, and sometimes price will find its way to these before rallying to the upside. Okay, so then we analyze the intricacies on the lower time frame. Okay, so if I just drill down, you can see that sharp move down, sharp move up. Often these are when the sharpness indicates how aggressively price will move from these areas last time around. And when we have a near miss, so we have a near miss to that area, that's often a clue that we will find our way back down to take out this near miss and the low that we near missed to last time around. So then I ask myself, is there any validity in these lower time frame structures which indicates that that might be the case? And if we just look, we have, this is more visible on the 1 hour, so I'm just going to draw down to the 1 hour. Okay, we have a completed piece of structure here. We have this kind of, this is more of a sort of running channel, but we have 3 sections. We have the 3 drives, 1, 2, 3, and within that, excuse me, we have a 1, 2, 3 middle section. So when we push up for that kind of third touch of this running channel, that gives me a clue that we're likely going to move from there. Then we kind of have this sharp hook point, which sells off aggressively, which just so happens to retest the previous low. and we tap into that area by way of a 1, 2, 3 touch structure, which has a 1, 2, 3 middle section, giving me a clue that this is a completed piece of structure, and we will likely push down from there, and we did. So then we have this. I talked about this previously. We have this sharp move up followed by a sharp move down. We near missed to that area. Then we have this very voluminous kind of middle section there, which gives me a clue, if we just measure it, that we would likely break out of that by a similar amount because of the volume that's been built up. We do break out of that by a similar amount, and then we break back in. Okay, so these are all things that I was anticipating at the time. We then get the same thing again. This is where the trade comes in. We get a bit of a sharp move up and a sharp sell-off, giving me a clue that there's liquidity here, hence the sell-off. We then get this 1, 2, 3 touch structure, this failed structure, because it doesn't quite marry up with where the liquidity is likely sat. We do have that kind of middle section within that. So it's no surprise to me that we don't commit from this third touch and we then break back up, because there's still liquidity sat here which needs to be filled before price can move to the downside. So this is where if I just unhide the trade now, we then have this, okay? Get rid of that paintbrush tool. So I'd said to you yesterday in my forecast, if we just analyze this on the 15-minute chart, this structure, so we break above, wash out all the liquidity there, push to the downside, and then we have this kind of 1, 2, 3, okay, where the impulses within that impulse correction continuation are of a similar length. There you go, they're of a similar length, just slightly short of this one here, but of a similar length. Within that, we have a middle section. So we have this kind of 1, 2, 3 wave move. You can even see the intricacies within that with the 3 touch structure there, with a 1, 2, 3 middle section in that. So these are the fractal patterns that we look for. And I was just anticipating that 1, 2, 3 to the downside, where if it had have committed, the impulse correction continuation, the impulse out would have likely been of a similar length, which would have allowed us to make some profit. However, we had news coming out of the United States yesterday. We had NFP, I believe, 12:15 UK time. So I shall explain the entry. So I was actually in a hospital yesterday. I was going to an appointment with my partner who's very, very ill. I'm not going to elaborate on that, but you may have heard me talk about that in previous videos. But anyway, I got short. So we had this green candle here. I've talked about how these bullish candles with a wick above them can often be filled. So I wasn't looking to get short, even though we broke above the high of the structure. I wasn't looking to get short until this 1 hour candle had closed and until it had been filled. Okay, so we did come up and we filled the wick. I've talked often about how these green wicks can be filled before a move to the downside. We did fill it, and then I was looking at the 15-minute chart. I wasn't too sold on this price action here, so what I did is I got short after the close of this red candle here, and I had my stop loss. This is what we call stop cropping. So if I get short on a green wick in a different scenario, I have my wick above the green wick, because of the fact that these green wicks can be filled. But because I got short after the close of a bearish candle which had already filled that wick, or almost all of it, we can then stop crop. You can test this with data, but we can then stop crop, so we can crop through the wick. And basically I had my stop loss 3 pips above the high of this structure, as opposed to above the wicks. So that is stop cropping. And then some momentum come in. The momentum come in pretty much immediately. And then when we were here, ordinarily, so here, this candle closed at 12 p.m. Ordinarily, I would have given this trade more room to breathe, because in my experience, price will often scoot back up to retest kind of the break of the structure, which would have been here. It'll often come back up, retest, tap out any orders from anyone that had moved to break even on the break, and then drop. That happens a lot. However, the reason I locked in, moved to break even at 12 p.m. is because at 12:15 p.m. we had NFP, non-farm payroll, data release coming out from the United States. And my rules are that I don't trade through NFP. So if I don't trade through NFP, I also don't expose my risk to NFP if I'm already in a trade, if that makes sense. So I fully accepted that price might wick back up and then drop, which it did, but then it just started messing around. We had more news coming out from the United States at 2 p.m., which I believe was manufacturing data. So it's no surprise to me that we have this sharp move down, sharp move up, sharp move down, sharp move up. That is just erratic price action. And I know of no examples of anybody who's profitable that just trades through erratic price action. So that was me out for break even in the end. If I'd have not moved to break even, could I have squeezed some profit out of this, or a little bit more profit? I would have, if I'd have not moved to break even, I would have locked in probably about 1% after the close of this red candle here. Okay, which would have, so my stop loss would have been just above this low, and I would have been running at about 1% profit there, just to give price some room to retest the low of the structure. But very happy with that. I did it for the right reasons. NFP is not something that you want to expose it's not quite as volatile as it used to be, but it's not something that you want to expose your risk to. So that is pound dollar. Technically, I made 0.2% profit on that, but according to my documentation, as I said, that goes down as a break even. I'm not interested in this now, partly because of that erratic price action, and because if we measure the impulse to the bottom of the correction, we are now retracing about 60%. And on more corrective pairs, that would be fine. But typically speaking, if we're pushing up that high on a pair like pound dollar, then it's more likely that we're just forming a deeper structure. And you can see that we may be near missing this area as well. So I'm just going to let pound dollar do its thing. That is pound dollar, 0.2% on that. And we move on to today's pairs. So top of the bunch is dollar Swiss. If we just analyze that, we have economic data. I think it's CPI data coming out from Switzerland at 7 a.m. So in about 55 minutes time. So that might cause a little bit of volatility. But the higher time frame narrative on dollar Swiss, as I see it, is we do have some near misses to the upside. But you can clearly see that we are in a run of momentum to the downside. We've broken above this high, caught people the wrong side of the market, and then we've pushed down aggressively, and we've since corrected all the way back up. So I'm just seeing this as a potential impulse correction continuation to take out this near miss, which failed to tap into this higher time frame, this standout liquidity point there. Okay. And as I drill down, the picture becomes a bit clearer. So although these near misses to the upside will likely get filled, it looks more likely to me that we will likely take out this to form a 1, 2, 3 touch structure, because within that we have a 1, 2, 3 middle section. Okay. So just looking at this as the higher time frame picture, if I just drill down, I've got to be mindful of the time on these videos, but as I see it, this is the bigger picture. We have a 1, 2, 3, which taps into this area of liquidity here where there was an exchange of liquidity. Within that, we have a middle section, 1, 2, 3 middle section, giving me a clue when we tap up to here that this is a completed move. And of course, we move down aggressively. We also, what I like about this pair, and partly why I've moved it to the top of my list, is because we have patterns within patterns. Okay, so within that, we have that impulse correction potential continuation. We have a pattern. If you just look at the larger pattern, this one looks the same, but on the lower degree, or very similar. So we have a 1, 2, 3 touch structure with a 1, 2, 3 middle section. Okay, giving me a clue that this is a completed piece of structure. And what have we done? Price has moved down aggressively. We then have, to some extent, we have this structure here, which has a 1, 2, 3 middle section, pushes up, third touch. You can see multiple touches here, but none of them really move away from this area, okay, relative to the overall structure. So when that happens, I kind of just see these as one touch. So we have a 1, this one doesn't really move away. This one does. So that is kind of the second touch. So we have a first touch there, which moves away. We have a move up, a second one, which doesn't really move away. and then we do move away. So this is kind of the second touch. Then we have that middle section, push up, and then we drop. Okay, so what I'll be looking for from this pair today is the following. If I just show you this on the 15-minute chart, it will perhaps make a little bit more sense. We have a little inflection point there where there is likely liquidity. And if the patterns that we look for repeat themselves and we get this kind of structure here, which has a middle section, then I will look to get short with a risk entry within the flag, and that flag would be more proportionate to the impulse down which has preceded it, and I would be able to manage it down to this low just in case price moved down and gave us this kind of head and shoulders pattern, which we do kind of see. Just in case we got something like that, which was larger, I will be able to manage it down to that low for something in the region of 4%. And of course, the real targets, the real solid targets that I'm interested in are down here. If we did keep going, we would have a profit target of something in the region of 15 to 16%. And of course, if we break, whoops, I've gone on the wrong time frame. If we take out this low on the higher time frames, then clearly it could be all systems go. It's unlikely that we would ever catch all of that move in one go, because we wouldn't want to leave all that profit on the table for psychological reasons. But that is dollar Swiss. I'm going to speed up now. So I've got an alert set just below that little inflection point that I showed you on the 15-minute chart. If that does not trigger, then I would not be looking to place a trade. This setup is more likely to occur. It may not be ready by the end of the day, but when we have a sharp move up like that, that is indicative of a slightly larger structure, such as this, which I would be anticipating. So Kiwi dollar. On the higher time frames, we have a near miss, which price failed to tap into last time around, giving me a clue that we are in a run of momentum to the downside, that we will likely take out this low, and which we failed, and this low here, which we failed to tap into. So we do have near misses to the upside, but I'm not too worried about that because we're in a run of momentum and because we have corrected below this low here. Okay, giving me a clue that there was not enough liquidity at that low to send price to the upside. We also have these structures within that. We have this structure here. We have that 1, 2. The second touch doesn't really move away. We scoot back up, fill that wick, and then we get that 1, 2, 3 middle section, giving me a clue that that is the second touch. That's the third touch, and that we're going to rally, sell off from there, which is what happens. We also have, I'm having to speed up a little bit because I'm running out of time on these videos. But we have corrected below this low. We have this 1, 2, 3 touch structure with a 1, 2, 3 middle section. We scoot back up as we sometimes do, not that commonly, but we scoot back up for a double top to take out the liquidity that was sat just above there, and then we push to the downside. We then have this structure here, which I was talking about. We have this sharp move up followed by a sharp move down. Previously, I was looking for trades within here. I didn't manage to get any. But we have this first touch, second touch, which just narrowly near misses it. We then have this middle section, 1, 2, 3, overextended middle section. We then have an internal structure. So we have this kind of 1, 2, 3, okay, which has a 1, 2, 3 middle section where the impulses are of a similar length. If we just measure this, okay, so again, this second touch doesn't really move away from the structure. This one does, so therefore this is the second touch. But we have this impulse. I've just measured it to there. Correction, continuation. And if we just measure that, that takes us up to here. So this, to me, just looks like that this is a slight breakout before a potential break back in. And so what I'll be looking for today is the following. If price, obviously I did this forecast last night, I wasn't necessarily anticipating price to move quite as high as it did, but then a lot of volume has built up within here. And as I've said previously, although on the lower time frames we don't typically break above the area of value by as much as on the higher time frames, when there's a lot of volume built up just beneath, sometimes we can break out a bit higher before breaking back in. So if that happens, what I'll be looking for is that break back in below this area of value, followed by a tight flag, and then I will be able to manage it down to these lows and most likely down to this low for something in the region of 7%. And I've got an alert set just below this area of value to see if we can break back below the area of value. And that is what I'm going to be looking for today, folks. If neither of my entries shape up, then I will not be looking to place a trade. But thanks for watching. Have a great day, and I'll speak to you again soon.